Ladies and gentlemen, shorts are hiding their short interest. This looks very obvious to me, especially when you look at the option chain for March 17th. Why are they doing this heading into such important events for AMC like AMC earnings as well as the vote on March 14th? Well, we'll talk about it here in this video, and maybe that's a reason why the FTDs have been spiking to levels that we have never seen before on a consistent basis. So let's get into it. Hit that like button and subscribe to the channel, especially if you learned something out of this video, or you like the stock, or you just want to make yourself some money. So that should be each and every single one of you guys smashing that like button right about now. So we're going to come back to the option chain because obviously that's the main premise of this video. But I do want to give you guys some of the background first before we dive into that. Because the short interest is already very high. It's at 23.32%, and AMC is on the threshold securities list. You have 120.31 million shares sold short, and I think that's what makes this very interesting, because if you do factor in how many shares I believe are currently sold short that are being hidden, your short interest is well excess of 35%, and that's a problem for shorts. That's a problem if AMC does start to rally over the next couple of weeks or the next couple of months. Now, last we knew, cost to borrow average 542.25%, cost to borrow max 955.66%, cost to borrow average of 7.6%. I think it's no surprise cost to borrow rates have been spiking, as well as, like I previously said, the FTDs have also been spiking. Now, what led me to believe that hedge funds are trying to hide their short interest in the option activity really has been raising red flags in the interesting option flow sentiment every single day. Over the last couple of weeks, really the last month or two, the interesting flow sentiment has switched from, neutral to positive to very negative. And why this is interesting is if AMC is up 10, 15, 20% on a day, like we've seen a couple times over the past couple of weeks, even 10%, the interesting flow sentiment is still super negative. It'll be like 3% positive for the day. That makes zero sense to me, and that's what led me to go on this rabbit hunt in the first place. So let's just be clear, that's where a lot of this theory ultimately originated from. Started to think this a while back, and now it looks even more prevalent when you look at the option expirations and where the short interest and FTDs are currently at. Now, speaking of FTDs, you got a lot. So I want you guys to look at these white lines right here. I'll scroll this up so I hide myself a little bit. You can see these white lines right here have been trending up, but consistently higher on a day-to-day basis than what we have seen ever. This is the most FTDs in a couple week period than we have ever had. And coming due over the next couple of weeks, you're going to have millions and millions of FTDs. And these trade dates were for January, including the T plus 35 settlement date. So if you take a look at tomorrow, you have 2.5 million FTDs. Wednesday, 1.8 million FTDs. Thursday, 1.5 million FTDs. And Friday, 1.4 million FTDs. If you take a look at the week after that, that's going to be the week of earnings for AMC. On Monday, you have 2.1 million FTDs, 2 million FTDs on Tuesday. On Wednesday, you have 3.2 million FTDs. On Thursday, you have 3 million FTDs. And on Friday, you have about 2.9 million FTDs. These are numbers that we have never really seen on a consistent day-to-day basis. And how are FTDs actually formed? Well, it's due to option activity. A failure to deliver is simply, think about it like this. Think about if you were a market maker or a hedge fund or whatever you are. You got a lot of money, right? And you're a market maker, so you're taking the back end of a lot of options. So if you have a lot of people buying calls or buying puts, then you have to either short stock for puts, buy calls, or buy shares for calls. If the stock does go up, then you'd have to oblige for those options, right? You'd have to buy shares, deliver them at the said strike price that was going into the money. Same thing on the put side, but you're actually shorting stock. So for these market makers, hedge funds, people actually taking the back end of these contracts, as AMC has went up, well, it hasn't boasted well if you have not bought your shares. For an example, if you had to deliver on shares at, call it, $4 per share. When AMC was at $3.70, didn't look too good. Well, maybe that was a decent trade to be on the back end of that call, right? Well, when AMC goes to $7 per share and you didn't buy the shares around $4, well, you're underwater in a big way. That's how it works to the call side. On the put side, same thing. If you essentially were a market maker and you were taking the back end of a $5 put, and well, you had to deliver on shares at $5, if the stock is now at $3, well, if you don't have those shares, that's a problem. Those are failure to delivers, where the shares are essentially unavailable, or they're not able to get their hands on the shares, or they just flat out don't want to close out of that position. So that's what a failure to deliver is. And when you look at the option activity, it looks clear to me kind of what's happening. So if we take a look at the Stonko tracker data, and I only really want to look at March 17th because that looks to be the most obvious one to me. And last week you did have a lot of option activity as well, but you got like triple the option activity for March 17th. We've never seen numbers like this, especially on the put side. But for the call side, 36,000 calls in the money, 443,000 calls that are out of the money. In the money puts at 326,000, out of the money puts at almost 900,000. Even during the depths of the gamma squeeze or short squeeze, whatever you want to call it, in January and June, you did not see levels like this. You did not see numbers like this. So that raises a big red flag, especially if you have been in AMC for a decent amount of time, right? And this kind of just exploded out of nowhere. It wasn't this high a couple of weeks ago. We knew March 17th was going to be a big option expiration, but these have over doubled, especially on the put side. Now, if we do go ahead and take a look at where this open interest is, well, you'll see quite a bit of it is at the $2 put, 472,000 for open interest. At the $3 put, 310,000 for open interest. 7,000 for open interest at the $4 put, and at the $5 put you have 77,000 for open interest. Now, when you get deep into the money puts as well, that's where that really starts to raise some red flags to me, because these deep in the money puts, people are not buying $10 puts. Retail investors are not buying $10 or $15 puts. It's simply not happening. Retail investors are not buying even these $2 puts, 500,000 contracts. It's not happening. Now, if you look at the deep in the money puts at the $10 strike, 203,000 for open interest. If you look at the $15 put, 63,000 for open interest. These are very high numbers. Now, how does this actually work to make it look like the short interest is a lot lower than what it actually is? Well, let's say you are a hedge fund, and let's say you do have a short position on AMC, right? And as you guys do know, one option equals 100 shares. So let's say you were short on, just simple math here, 1,000 shares. Well, you're gonna need 10 options to make it look like you are not short on 1,000 shares, meaning that if you are buying these options on AMC, especially the ones that are deep in the money, you can go ahead and report to the reporters that you don't have a short position on AMC because you have your options that are essentially protecting you, and it's really just a flaw in the system that is exploited by hedge funds. And especially heading into such major events over the next couple of weeks, earnings next Tuesday, as well as the March 14th vote, well, they don't want to make the short interest look like it's 30 or 40%, do they? I don't think so. Well, if we take a look at the calculator here, what are you doing, kid? Oh my gosh. Take a look at the calculator, and you just take a look. Let's just do 900,000 times 100. That's potentially 90 million shares that could be sold short that are being reported that they are not. I like to be conservative here, so even take 30% of that. Even take 50% of that. Call it 45 million shares. Let's say half of that is just hedge funds doing their usual option activity. That would make the March 17th option expiration around 400,000 puts out of the money. And what was it in the money? That would be about 150,000 puts in the money, 400,000 or 450,000 puts out of the money. That makes a little more sense to me. That looks like a more normal option expiration. So just divide that by 2, right? 45 million additional shares. If you take a look at the total number of shares sold short in AMC, 120 million at 23.32% short interest. I think at the bare minimum here, I mean, if you add 45 million to this, you're at 165 million shares. You're approaching, 35% right there, depending on what, percentage you use. Like we just went over, you could get 90 million shares, or you could get 60 million, right? 50 million, or even less than that. Point is, the short interest is likely a lot higher. There's probably a lot more shares that are sold short currently than what is actually being reported to us based off of the reporting standards. And what this could ultimately do for AMC is create a much more explosive rally than people are anticipating for. It could, in a way, change the dynamic, because if people knew AMC short interest was, call it 40%, they would act a lot different, right? Maybe other hedge funds would act a lot different. Maybe they would actively buy the stock and not sit on the sidelines. That's the real issue here. But when it comes down to it, short interest is still short interest. Once these options, come and go or get closer to expiration, it will free up a lot more capital and let a bigger move transpire in AMC stock. So ultimately, what this means for AMC, in my personal opinion, is down the line, AMC can rally more. Now, based off of earnings, if earnings are good for AMC and AMC does rally, you might actually see the short interest go up as a rally does form, as some of these put options get taken care of, get sold, get swapped out. You might actually see the short interest rise if AMC does ultimately rise after earnings. Now, March 14th, I think, is the real reason why these people are playing with the options. I think if AMC earnings blow them out of the water, I think that's just a positive thing. But coming on March 14th, I think you get a bullish reaction from that as well, because it's already priced into the markets what's going to be happening with AMC. It's already priced in that this reverse stock split is going to happen. It's already priced in that AMC is going to pay down debt and get some additional capital and raise 25 million more additional shares into the market. So long story short, I think this ends good for AMC, but these hedge funds don't want to let you know how exposed they are to an upside move with their short positions. And an easy way to do that is just buy the options, report to FINRA and the DTCC that you have essentially covered on your short position, or maybe that you never had one at all because you bought the options at the same time. You guys get the drift of what is being said in this video. So I think it's pretty safe to say it's confirmed. The short interest is a lot higher than what, you know, is being led on, and those are my personal opinions. Obviously it's not 100% confirmed. You don't have the order book of what is going on, who has options, who has short positions, so come to your own conclusions. I'm not a financial advisor, and I don't want to make it seem like I am, or that I have the secret pill or whatnot, secret sauce, whatever you guys want to call it. But there's a compelling argument here, and that's what we just made to all of you guys. So let me know down below, what do you guys think about all of this information? Hit that like button and subscribe to the channel if you have not already. Thank you for watching, and most importantly, enjoy the rest of your night, and I will see you in the next one.